One for the Nigerian stock market as investors recorded the biggest gain in recent months. So precisely on November the 12th, the Nigerian Stock Exchange triggered the circuit breaker for the first time since it was introduced in 2016 when the all-share index rose beyond the set threshold of 5%, triggering a 30-minute trading halt of all stocks. Now, lately, the stock market has been the only attractive viable option for Nigerian investors in the absence of alternate attractive investment option. But the acting MD at the Quadras Capital Asset Management, Gbolahan, Aina, joins us now to tell us what other activities shaped the entire markets in the month of November. Good morning and thank you for joining us on the program. Now, what are the key themes that shaped the markets in the month of November?
Good morning, BC. Thanks for having me. Really, the month of November was quite interesting on all fronts. And I hope you made money because a lot of people made money in the month of November. A lot of the markets were bullish. The equity market, bond market was also bullish as well. Oil prices firmed up. And so it was quite an exciting month generally for the market. And in terms of what shaped the market, quite a number of things. The month of November was when we had the US election. So on the global front, we saw that shape a lot of things. We saw bond prices rally in the month of November. We saw oil prices also rally as well in the month of November. And in November as well, the COVID-19 vaccine was announced as well by Pfizer and BioNTech, and also by Moderna as well. So market also rallied on the back of that. We're looking at our own local space. I think the liquidity in the economy for the equity market, and like you said, the equity market has been quite interesting, at least for Nigeria. At the moment, Nigerian equity market is the third best performing stock on a dollar-adjusted basis, and the second best performing stock. Market has gained 31% year to date. And look at some of the key sectors. The insurance sector gained 35% in the month of 8% in the month of November. Oil and gas gained 0.6%. Banking gained 5.7%. Consumer good gained 6.2%. While industrial good gained 4%. And that's coming from like a period where the market was in a loss position. The market actually started very well this year, gaining 11% in January. But of course, that's reversed with the COVID-19 pandemic and the decline in oil price. So our Nigerian market is quite bullish at the moment and supported by the extra liquidity that we have. If you look at the bond space, that also experienced some bullishness as well. We're trading at unreasonable levels, if I may say. 50-year bond is currently at 7% levels, but it gained quite some, about 40 basis points in the month of November, and still supported by the liquidity that we have in the system. So in terms of the macro environment, I think there were some big announcements in the month of November. GDP figures came out, inflation figures came out. Well, GDP figures wasn't surprising. Was our official announcement into a recession. And when GDP figures came out, people were not surprised, but I guess people thought the decline would have been more. It was just a negative 3.6%. And in terms of what shaped the GDP figure, one was a slower pace of growth that we saw in the previous quarter. Nigeria compliance to the OPEC plus quarter. There was more compliance in Q3 than we saw in Q2. So in terms of production cut, there was a reduction in production, and that affected oil GDP. On the non-oil sector, it's still more of a COVID-19 narrative. So it had lingering effects on business activities, despite the fact that restrictions had been lifted. So the oil sector contracted by 2.51% year on year, and really contraction were in though agriculture again, we saw contraction in industries, -6%, contraction in services, and construction in services as well. So also another thing to also talk about in the month of November was inflation figures. And of course, inflation has been on an upward trajectory. So the October figures didn't come as a surprise. Inflation for the month of October was 14.23%. And that's up from the 13.71% that we saw in the month of September. Majorly stemming from food inflation. Food inflation rose by 72% to 17.38% for the review period. I think price increases were seen in bread and cereals, potatoes, and other tubers, meat, fish, fruits, and also some alcoholic and food beverages as well. And really, this is an increase from what we saw a month ago. I think core inflation also affected as well. But we expect inflation to still be on the uptrend, majorly based on food inflation. I think another major thing that we saw in the month of November was last MPC meeting for the year. And the MPC voted to maintain status quo and really was on a balance of factors. So they thought about if they had increased the rate, was going to more or less dampen whatever success they've recorded in terms of economic growth. So it was going to be counterproductive. So they didn't consider increasing the rate. If they had reduced it, their thinking was that there was going to be excess liquidity in the system, and really that might fall speculative demand on the dollar. And so that was like a no-no. So they thought to just wait and see the price decline, the change that they made in the last MPC meeting to see how it was going to affect the market. So it was status quo for the MPC meeting. I think another thing I'd like to touch on was the FX markets. Although the external reserve gained by 276 million for the month of November, but key thing was we saw depreciation in the Aina window, we saw depreciation in the parallel market. And just to mention, so there's some circulars that came out this week from the CBN regarding the FX, and that seems to be driving demand. So we seem to see the liquidity in the system now. Before the circular came out, the parallel market had gone as high as 515. As yesterday came down to 505 naira to $1. So there seems to be a bit of stability in the FX market, and based on that circular, the initial circular had probably further a bit of speculative demand, but CBN came out to make a bit of clarification. Some people were not able to transfer from their DOM account, and CBN said that as long as it's a transfer, you can always transfer to, you have unfettered access to your dollar transfer. So those are some of the things that we saw that shaped the market in the month of November. It was quite an interesting month. Like I said, there was a lot of money to be made. The equity market gained 14% in the month of November, and currently year to date is at 31%. On a dollar-adjusted basis, Nigeria is currently the third best performing market with a 22% year-to-date return.
You talked about some of the recently released circular from the CBN. Of course, we also know that yesterday the CBN released another circular on banks, excess CRR to spur economic growth. How optimistic is the market about this?
So it's two things. So there was a circular that was supposed to release, and the circular was more or less CBN trying to release the CRR for banks to a special OMO. And in that circular, it wasn't too clear whether institutional investors and retail investors could trade the bill. The idea was that excess liquidity or that cash reserve ratio, so really the cash reserve ratio for banks is 27.5%, but for most banks, the effective CRR is about 40%. That means that excess is being sterilized at the CBN, earning 0%. And for a lot of banks, it's affected their ability to fund operations. And so with this, it means that liquidity is being released into the system. But I guess what people are waiting for is what rates is going to be advised for the special OMO, because that's going to affect a lot of things in the money market space. I suspect it's going to be higher than what we have at the moment. So we might see a bit of a pricing in the short term of the curve. So some money market rates, treasury bill rates might begin to inch up. If you recall, treasury bill rates are currently at record low levels. The last auction that we saw in the month of November, the 1 year was about 0.03%. And I did mention before that really these are negative returns for investors. And for a lot of investors, it doesn't really make sense to be buying some of these instruments at these rates. So what we think is that there's going to be a bit of repricing. Banks are going to have a bit of liquidity to be able to fund some of their operations. But the CBN did say in initial circular that they are going to ensure that banks use it to fund the real sector. But the good thing is that the retail investors can trade it, institutional investors can trade it. If you recall, over a year ago, the window for retail and institutional investors trading in the OMO markets had been closed, and it was just the FPIs and the banks. But now it's more as if they are opening up the market. So this is more instrument that can be traded and more liquidity in the system.
Now, I'm
quite optimistic if I will answer your question.
All right. So I was just going to say that we should dwell more on the equities market. Of course, many traders believe that the bull run may just continue into the end of the year. Do you see that happening as well?
Yes, I definitely think so. So really the low yield environments and really other prevailing market conditions are really for the bull run that we've seen. Why I suspect is that we might see a bit of profit taking as we enter December. But the question is really where the alternatives. Dividend yield on some of the equities is double digits, and which is quite attractive. The money market instrument will not give that sort of dividend yield.
So on the dividend yield perspective, you can see a lot of people positioning. Like I did mention, that with yields at almost 0% levels, people don't really want to keep their money at that level. And so the equity market is still promising. I think what we're going to see is that we're going to see a bit of profit taking, some pocket of profit taking. I'm going to see a bit of renewed interest in the market in the month of December. So there's going to be like a December rally. There's going to be a Santa Claus rally. But I still expect to see bullishness in the equity market. And really that defines the macro story. So the macro story for Nigeria is not too pretty at the moment. We're in recession, we're in stagflation, high unemployment, high inflation rate. There's still a bit of exchange rate issues as well. So it's just the liquidity that's swallowing the rally that we've seen in the equity market. And there's still nowhere to go. So I still expect to see a bit of bullish run in the equity market. But like we've been saying, people should look for fundamentally justifiable stocks. Because this to make money at the same time is also very, very easy to lose money. Because some stocks are trading at unjustified levels at the moment because of the rally that we've seen. But I still expect a bullish run in the equity market in the month of December.
Now, away from the equities market now, according to the CBN, the PMI improved in November, standing at 50.2 index points. Of course, that indicates a recovery from contraction in the manufacturing sector recorded since May. But what kind of signal does that send to investors in relation to the real economy and the markets?
So really what the PMI tries to show is how manufacturers perceive the economy. And really, like you mentioned, that the perception is that the economy is recovering. So any go above 50% shows that there's positivity or there's optimism. So that shows that there seems to be a bit of positivity in terms of how manufacturers view the economy. And they look at a number of indices so across new orders, across inventories, and a few other things. Which is good. And like I mentioned, when the GDP reports came out, despite the fact that it was a negative decline, the decline was not as much as we expected. It was just a negative 3%. A lot of analysts we are told was going to be much more than that. So we think things are recovering, things are picking up, and the announcement of the vaccine as well, though it might not come from Nigeria earlier as well, but it means that the global market is going to pick up. It means that there's going to be demand from the global market. There's going to be demand for oil. And that's probably going to also help our FX receipts or our dollar receipts as well, and that's good for our economy. So it's good. Just to answer what you said, yeah, a PMI rating of above 50%, 50 is good for Nigeria.
Now, for how long do you see foreign portfolio investors staying out of the Nigerian debt market?
So for the FPIs, so two things inform why they invest. One, return, and apart from return, they need to go to exit the market as and when they want to. So there's been an issue with FX, and that issue has not been solved. Until the FX issue is solved, that is when we probably see them to return to the market. But what some FPIs have been doing is they've been exiting the market through there's a good ETF that we have. So most FPIs have been exiting through that window. Some have entered in past the surplus dual listing as well, Airtel. So until the FX issue is solved, I don't see that coming to the market. And it's quite simple. So for instance, an FPI probably makes a return about maybe 30% on their equity investment. If they lose on a dollar adjusted basis by 50%, that means their real return is actually a negative. Because when they spend dollars, they don't spend Nigeria. So for them, the real return is important for them. The dollar adjusted return is important for them. And if there are still issues around FX, if there's issues around them being able to enter the economy or enter the market when they want to, that definitely going to sit at the fence. And that issue has not been solved. That issue is still lingering. So they're still going to hold on for a while until the FX issue is solved.
All right. Now, we've seen oil prices extend declines as OPEC Plus delays its meeting over oil production cuts. But what are your expectations from that meeting and the implications for Nigeria?
So in the immediate, I think they might extend the cut to 7.7 million barrels per day till January. And if that is extended, really that is good for us. There are some people advocating that there should be more barrels coming to the market. And I don't see that happening because Saudi Arabia, which is the facto leader, wants the production costs to still exist for a while. So that's good for Nigeria. However, if the market is flooded with oil, we are going to see oil price crash like we saw it. I think it was in the month of February when oil futures even got to 0% negative levels. So as long as they maintain the production cost, Nigeria is fine. Oil is currently trading between $4 to $45 per barrel. So Nigeria will be fine. But if the market is flooded with oil, that's when there's a cause for concern for Nigeria. So for me, I expect them to hold on to the production cost to January, and they might even extend it beyond January.
Now, a quick look at the Eurobond market in recent times suggests that SSA papers have been badly hit by the indecision of OPEC Plus on production measures. Now, the Angolan pair has been the worst hit, while Nigerian papers have been worsening from the middle to the long end of the curve. Any idea what investors should expect to change in the short term?
Okay, but in addition to that, so generally we've actually seen the bond prices rally. And I did mention two things were contributing to that. One was the US election, and one was the vaccine that was announced by Pfizer and Moderna. So for instance, while the First Bank paper that was issued at 8.6%, currently trading below 7% now, a lot of the corporate euro bonds have gained about 10% in the past couple of weeks since the US election. So the market has been rallying, and so I still expect to see a bit of rally. But for the likes of Angola that seem to have an issue, maybe not have an issue, maybe that's not the right way to put it, because their performance is really linked to oil price. We've not seen so much rally that we've seen in some other corporates. But Nigeria as well, for Nigerian papers as well, I've seen a bit of rally in the past couple of weeks as well. I still think the rally is still going to extend, and being fueled majorly by two things: the vaccination and the US election. Those are primarily things that for the rallies that we've seen. But I guess by the outcome of today, I don't expect any major change in today's OPEC Plus announcements. So I don't expect anything dramatic to happen in the Eurobond market.
Many thanks, Acting FD, Codros Capital Asset Management, Gbolahan Aina. Thank you for sharing some of your thoughts with us this morning.
Thank you very much. Thanks for having me.
We'll be talking about Nigeria's transport infrastructure when we return in just a moment. Please stay with us.